Good morning, this is Dhesi Market Memo, Markets Simplified. Today is about a sharp rebound in gold. Equities holding up even as rates and policy risk stay in the frame. And dollar still firm in parts of EM and Asia. Three things from the board. First, gold. It is up 3.3% over the last 24 hours, but it's still down over the last week. So this looks like a rebound after a volatile few sessions, not a clean straight line trend. Second, rates and risk. US swaps are still elevated, with the US 10-year swap around 4.16%. Equities are not collapsing alongside it. The S&P is up 1.1% over the last 24 hours. And that tells you the market is still willing to take risk, but it is doing it with one eye on policy. Third, FX. Dollar yen is up 0.6% over the last 24 hours, and sterling and euro are a touch firmer. The message is it's not about one pair, is that FX is being driven by the rates narrative once again, not just growth data. Now the glue. Markets are connecting three dots. One, the Fed chair succession debate, and the possibility of a tougher stance via balance sheet policy. Two, inflation and producer price risk that keeps the US rates path alive. Three, geopolitics and risk premium creeping into price action, which tends to show at first through the dollar and through precious metals. But together you get a dollar that stays supported, real assets that can move sharply, and equities that can still rally but feel more fragile. Credit is calm. US investment grade spreads are around 0.74% and high yield around 2.8%. Crypto is mixed. Bitcoin is up 3.3% over the last 24 hours, but the 24-hour change for Ether is still negative. That is consistent with crypto trading, like risk and leverage, not a hedge. Two practical points for anyone running currency or funding exposure. First, if you are rolling hedges, split your execution because intraday ranges can widen quickly when the policy mix story is live. Second, keep an eye on funding conditions and carry, particularly where yen is involved, because when carry gets unstable, it can tighten liquidity before you see it in headline levels. So, what to watch? The calendar is relatively light today, so the focus shifts to the big set pieces. The Bank of England and the ECB later this week, and the next inflation and producer price signals in the US that feed directly into the rates path story. That's Dhesi Market Memo, Markets Simplified. If this saved you time, please do subscribe and comment on the one level that you're watching today.